is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I actually bought 4 new dividend growth stocks. I'm going to surprise you on some of them. One of them is actually one that I owned, I got rid of, sold for a profit. Probably should have held on to it. It's a very good, solid dividend growth stock. Some of you may own it. It has a very good reputation of dividend growth, a very rich tradition in dividend growth. It is a stock, a dividend stock. It's a very good dividend growth stock. It's actually done very well against the S&P 500. Has raised its dividend. I'll go over the revenue trends as well. It was just too good of a buy. And I used that Yieldmax passive income to buy this one and 3 other ones. Again, you know, dividend growth always wins. It's expected to always win. Not all the time, but in theory, dividend growth, the good dividend stocks, the solid dividend stocks, the board of directors usually hike their dividends, make the announcement because the revenue trends are good. And everything else is smooth with these dividend growth stocks. And I'm going to explain to you why I believe, and this is why this is in my dividend portfolio. Of course, it's not financial advice. It's for entertainment purposes only, that this is a smooth dividend growth stock. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out this dividend stock right now. And Aflac is a dividend stock. It's doing pretty decent against the S&P. You know, they had a significant dip. It's losing against the S&P right now, but it appears to be slowly catching up. Will it beat them? It is what it is if it doesn't. But I bought this for the dividend. I'm going to show you the revenue trends, and it's attractive that it's less than the S&P 500 because when dividend stocks keep up with or are beating the S&P 500, that's still a good thing if you have in your IRA and everything. But at the same time, can you keep up with buying it? So it's sitting at 88.93. In the past 5 years, the S&P has been up 85.05%. Aflac was at 56.32%. So that is attractive for me. It's not beating the S&P 500. I don't have to play catch up to start buying it. It's at a cheaper price than the S&P 500. Dividend yield is 2.25%, a PE ratio of 9.81. The average volume is 2.20 million. The market cap is $50.53 billion US dollars. Year range is $69.91.15. So again, it's starting to creep up a little bit. Its day range is 88 to 89.64. Previous close is 88.52. So starting to get up there in price. And man, I remember when I had it really low during the pandemic and then I sold it. Probably should have held on to it. That's one thing to, you know, as I learn is, you know, with my investing strategy and enhance it, I'm pretty sure I sold it for a profit, but now it's time to be a buy and hold forever dividend stock. And I'm going to explain to you why I like it, going over the trends, the financials, and going over the dividend growth, why it's going to be one of my buy and hold forever dividend stocks. I'm going to go and start in June 2023, the revenue. Now, quarterly financials, it was down 2.69%, $5.17 billion. The operating expense was down 9.23%. Net income was up 17.22%. Net profit margin was up 20.43%. Earnings per share was up 8.22%. Then in September, revenue was up 5.23%. Now again, this is quarterly. $4.95 billion. The operating expense was up 0.77%. Net income was down 11.90%. Net profit margin was down 16.27%. Earnings per share was up 60%. December 2023, revenue was slightly down at 4.31%. Operating expense was up 4.67%. Net income was up 36.73%. Net profit margin was up 42.94%. Earnings per share was down 3.10%. But recently, March 2024, the revenue was up 13.25% quarterly. Operating expense was down 4.65%. Net income was up, which is good, at 58.16%. Net profit margin was up 39.68%. That was at 34.57. Earnings per share was 1.66. That was up 7.10%. So we're seeing all the good things. EBITDA is up 58.91%. So we like that. And I'm going to show you the annual revenue trends of Aflac. Here's their annual trends. 2013, this is annually in millions US dollars, 23,939. 2014, 22,728. 2015, 20,872. 2016, 22,559. 2017, 21,667. 2018, 21,758. 2019, 22,307. 2022, that would be 19,140, and then 2023, 18,701. So I went over the most recent trends with things going up. Okay, that's what has me attracted to them. They have a rich tradition of growing their dividend, and I'm going to jump to that. Now, looking at the revenue trends, again, you know, what I've said before with Altria and Philip Morris, watch out for the revenue trends, because if the yield is high, you got a bunch of issues. But let's go over their dividend history. This is what sold me on them, and which makes me have these guys as a long-term dividend growth stock. Start in 2009. Quarterly dividend distribution, 28 cents. And then 2010, 30 cents. 2011, 33 cents. 2012, 35 cents. 2013, 37 cents. 2014, 39 cents. 2015, 41 cents. 2016, 43 cents. 2017, 45 cents. I'll get to that 26 cent change in 2018. Then in 2019, 27 cents. 2020, 28 cents. 2021, 33 cents. 2022, 40 cents. 2023, 42 cents. And then in 2024, 50 cents. Their payout ratio is pretty attractive. So the thing with their dividend growth in the past 5 years, it's up 14.40%. So its payout ratio sits at 32% of its earnings. That appears to be a safe dividend growth stock. Dividend increases in the last 5 years is 5. So if you bought one share, you made $2 with a 2.26% dividend yield. For me as a dividend investor, that is very attractive. Now, again, before I finalize everything, I'm going to show you the history of Aflac with their stock split history. So looking at their stock split history, recently, let's just start in 1998. They made a 2-for-1 stock split. In 2001, a 2-for-1 stock split. In 2018, a 2-for-1 stock split. So that's one thing that is attractive. They do have a pretty nice history with a stock split history. It's not guaranteed, but that is pretty cool that they actually are pretty consistent with their stock splits. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will reveal to you my 3 other dividend growth stocks. I'm going to do one on Friday, so make sure you hit that notification bell after you subscribe. And I'm going to jump to my disclaimer. Take care and have a great Tuesday. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. Do not use my YouTube channel for any form of tax advice or financial advice. Go see a tax advisor and financial advisor as a reference. Again, strictly entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence when you become when you do your investments, you can lose money. So just be aware of that and make a very smart financial decision, an economic decision when it comes to your dividend stocks. Don't use me as a reference. And again, I do make changes to my dividend portfolio if something drastically changes, like a stocks reverse stock split, just things aren't good, a dividend cut, or something drastic with their management strategies. So you guys take care and have a good one. And I plan on being a buy and forever hold dividend stock. Take care.